with the strong brand. I wonder how quickly you think Nike has to clear that inventory in order to be healthy with the economy slowing down.
Yeah, sure. Thanks for having me. Nike's inventory is most out of position in North America. It's up over 54% from the prior year. It's actually in a good position in China. And I think you'll hear them talk to gross margin improving year over year in the fourth quarter and into next year in fiscal 24. I think much of the gross margin pressure is behind Nike at this point after they report the third quarter.
But, I mean, doesn't North America matter a lot, given everything that's happening over here? I mean, I know we've been paying a lot of attention to China. That reopening is good, but does it necessarily balance out?
It doesn't. I mean, their gross margin should be down over 250 basis points year over year, and largely because of pressure in North America. So there is a lot of pressure modeled in the business. I think where Nike's been very conservative is with their top line guidance. So we think they can raise their top line guidance, but there will be quite a bit of gross margin pressure from North America in Q3.
You got an outperform rating on the stock. It's rallied 17% over the past 3 months, essentially since the last earnings report. You like the valuation here?
Well, it's not cheap right now on traditional earnings metrics on this year or next year's earnings. But if you think that Nike's shift to e-commerce and direct-to-consumer, when that revenue moves to 50% of the overall business, there'll be a massive inflection in the company's operating margin structure. And we think there's roughly $7 plus in earnings per share potential. So on 2025 and 26 estimates, as the shift to e-commerce takes hold, this stock is cheap, and we think it'll be one of the better performing stocks in the group.
Foot Locker had a meeting today. Stock swung around and ended the day down about 5.5%, almost 6%. The read through from that meeting to what you're expecting from Nike tomorrow.
Yeah, Foot Locker is in a tough position. They're shrinking to become more productive. They're going to close over 400 doors. Nike is still going to be roughly 60% of their overall business, but they're in a very competitive market. They're competing with Nike direct-to-consumer channels and other retailers. There's other brick-and-mortar retailers that deal with Nike that we like much better, like Dick's Sporting Goods and Academy Sports.
So how much is Nike affected by what's happening in the overall retail environment, and how healthy is the overall retail environment, even for premium brands like Nike? Does the strength of a Dick's Sporting Goods outweigh the troubles of others?
Sure. Yeah, the macro environment's very tricky. You know, where is the consumer going to be 6, 9, 12 months from now? I think it's as uncertain of environment as we've really been in since the last recession in 08, 09. Nike's brand is in a point of strength. We think they can raise revenue guidance, and we think their differentiated retail partners like a Dick's Sporting Goods are in a great position. A lot of these stocks valuations reflect a lot of the macro uncertainty you're hearing now. So I think there's good value here in Nike and also Dick's Sporting Goods.
So looking at your coverage universe here, is Nike your top pick, or would it be something else if you could buy just one stock right now?
It is not our top pick right now. I would rank probably Dick's Sporting Goods or Deckers brands ahead of Nike in terms of just the upside to consensus estimates and valuation over the next 12 months.
All right. John Kernan, thank you.